when you want to ask a question, do use the chat function. I'll be regularly monitoring that to hear from you and how you think, any comments that you might want to raise. You can actually, at the top right, there is a button that allows you to raise your hand. And just to let you know that this session will actually be recorded. I'd also like to say thank you to the Australian APEX Study Centre at RMIT University and the Australian Department of Foreign Affairs, who are sponsoring this event as part of the ASEAN-Australia Digital Trade Standards Initiative. So now turning to the focus of today's webinar, digital transactions in ASEAN, impact on inclusion amidst COVID-19. So this pandemic has really seen a rise in demand for digital transactions, as we're seeing more business and consumers are actually transacting online in various different sectors. As a result, we're seeing a number of governments across Southeast Asia and even private sector, they've actually accelerated some of these initiatives to actually encourage more digital transaction services being made available. And we're also seeing a focus on financial inclusion on when these services are delivered. And this is to make sure that no one is basically being left behind. However, the pandemic has had quite a significant impact on businesses, in particular micro SMEs. Here in ASEAN, they actually represent, where I'm based here in Singapore, they contribute quite a significant part of the economy. They also create a lot of diversity to the economy as well. And so many of these businesses have had to really adjust and transform and make their business online if they are not already there. And so what are we seeing? We're seeing some MSCs are thriving, some are surviving, and unfortunately some are actually dying. And so in this webinar today, you'll hear from our experts who share their experiences about what are some of the opportunities for these MSCs going forward, what are some of the challenges, and what can we do as government, in academia, in private sector to maybe help overcome some of those challenges and strive for more inclusive economic recovery. So that's the theme, and we are very lucky to start the session off with a distinguished keynote speaker. We have Miss Pia Burnett Roman Kayang. She is the Director of the Office of the United Nations Secretary General, Special Advocate for Inclusive Finance for Development. Bernadette Pia is a wealth of experience in this sector. She was actually appointed by Her Majesty Queen Maxia of the Netherlands, and she's had an experience of 20 years at the Central Bank in the Philippines. Particularly thankful, she's joining us from New York at very early hours of the morning, and very grateful for you to share your experience. So Ms. Pia, thank you for joining with us, and the floor is yours.
Thank you, Nimisha. First of all, thank you for the organizers for inviting. Despite the time difference, you did say I'm joining at 2 a.m. here in New York. It was an invitation I could not say no to. I've worked with the Australian APEX Study Center in the past as well, and also seeing the colleagues in the panel who, as you know, are also colleagues and friends of mine, but most importantly, because of this very important topic and looking at it at the ASEAN region, where, of course, also is where I'm from. So thank you, and I'm happy to be here with all of you. So just to start off, and I think, Nimisha, this takes off from exactly what you were saying about the pandemic. If we go to the next slide, really it will just show us some observations. We've heard many commentaries already about the pandemic, of how it accelerated digital. Some have called it the silver lining of the pandemic, you know, in really trying to find the positives, if at all, of this pandemic. But just I would just phrase them as observations and tie tie to them the opportunities and possible ways forward that I would also like to share. So first of all, there's definite significant move to digital, and I think largely catalyzed by government to person payments. So I think the World Bank has, in a recent report, showed that from March to December, about 166 governments launched a total of over 400 cash transfer programs, and this expands the G2P recipients to 1.1 billion people. I think just the sheer number of that, when we look at opportunities for inclusion, is something really to think about. Uh, so a lot of the digital has been catalyzed by the G2Ps, and of course, as you said, consumers being forced because of physical constraints to shift to online payments. So here, for example, in the Philippines, where a lot were still very much comfortable in cash, we're in a way forced to shift online, and this has been observed globally as well. So that's been an acceleration on the customer level in terms of being open, and in terms of, in a way, being given no choice but to make online payments. So I will park that as one key observation. The second one is that we have seen in the response, as well as in the early recovery efforts, that those with what we call digital public goods um, that were in place were better able or quicker to respond. And I'm happy to have our colleague from Thailand in the panel because, for example, in Thailand, they received millions of applications for the social transfers and were able to filter those through existing registries. They also had accounts that were linked to their unique IDs, which expedited processes of disbursement. Of course, we know in India with the Aadhaar and even their past programs, for example, their financial inclusion programs where they had accounts that were already biometrically deduplicated with Aadhaar, really allowed them instantly to credit about 200 million accounts from that past program, on top of those that were identified to be recipients of the social cash transfers. So I think this really made the case of having in place the set of digital public goods, whether it be digital IDs, whether it be instant retail payment systems, for example, and of course having the registries that were with proven integrity and have been deduplicated. The last one you also mentioned, Nimisha, especially on MSMEs, is that everyone was affected and has been affected by the pandemic. But we have seen that women, informal workers, smallholder farmers, MSEs were really disproportionately affected by the pandemic. So they were the ones who were also possibly unserved or underserved in terms of financial services, or also in a vulnerable footing before the pandemic hit. The UN Women estimates that 47 million more women and girls worldwide have fallen into poverty since the start of the pandemic. And so that pushes overall to about 435 million. Most women in paid work are working informally, around 95% in Asia, and they were also the ones that were most hit. Typically, they're not registered in any of, for example, government programs for displaced workers. So we're not able to also receive any of the social payments in that regard. Of course, MSEs as well as women-led MSEs were also disproportionately affected, and were and figures have also shown that they were more likely to close their businesses compared to their male counterparts. So these observations, I think, set for us the framework of how do we want to rebuild and make sure that we rebuild and recover in an inclusive and resilient manner. The next slide, I'm just showing here again, trying to lean on the optimistic side. Really, what are the opportunities that we are seeing? So now the first one is the most obvious, but I'd like to spend a little time on this. just the number of new accounts created because of the social payments that have been disbursed is really an opportunity for meaningful financial inclusion. And I say meaningful because, just because the accounts were created, of course, this is something to highlight that, millions of new accounts in a short number of period were created. These were an effort that many governments have been trying to do, but the pandemic really accelerated it. But we should really not stop at that and really think about what should this account now mean to that beneficiary. So what are the second generation opportunities that we could present from having this account? Let's make sure that there is, that this makes sense for them, this is relevant for them, this is something that they can benefit from. Is it a means to save? Is it a means to make payments, to create a behavior and some information to access other financial services that are fit to their needs? So definitely we should not stop and rest on our laurels here, but really think about how to make this an even more meaningful tool for these account holders benefit. Second opportunity is that because of the pandemic and the three things that I mentioned is that there's really broader stakeholder buy-in on the importance of financial inclusion. I don't think we need to advocate for just the importance of financial inclusion anymore. Everyone has seen it, and everyone has seen the risk of being excluded. And this, I think, is an enabler of many of the reforms that need the whole of government. So a lot of the heavy lifting are, done by certain parts of the government, certain players. But I think now there is that real recognition where we could really see different entities of government realizing that there is a need for that kind of collaboration, putting in place systems, digital public goods that cut across systems. So, agriculture's ministries, for example, realizing how important it is to have these digital registries, for farmers that are receiving subsidies, for them to have access to information digitally. And so connecting all of that to local, to those taking care of local registries, seeing the importance of a digital ID, of retail payment system and how it impacts person to government and government to person payments. So hoping that this momentum does not stop and it's really used to be able to put in place these reforms necessary. The third one is really the urgency on focusing on desired outcomes. I think now we know the type of financial inclusion we want to see. So it's really I guess a wake up call for us to see whether, are the objectives of just having an account, of having access and, just usage of account sufficient? Or do we really need to be deliberate in terms of policies and programs to target the desired outcomes that we want for women? So for example, putting in place digital public goods, instant retail payment system that are mobile enabled. We still have a big gender gap in terms of mobile phone penetration for women globally. And so what kind of design do we put in place to really target those needs and those gaps? So smallholder farmers, for example, for MSEs. So I think these are opportunities that I think are pushing the industry to look at, beyond inclusion, what is the type of inclusion we want to see and what impacts do we want to see? It's really a focus on outcomes rather than just, the process. And so in this role, as you mentioned, I am the director. It's a small office that supports Her Majesty Queen Maxima of the Netherlands as a leading voice to champion universal access to affordable, effective, and safe financial services for the unbanked and the unserved. So Her Majesty encourages leaders across the world, both government and private sector, to really expand financial inclusion. And these themes that I have mentioned are themes that she has taken to, the global agenda, the G20, for example, as well as in her country engagements. And I'd like to just share some possible pathways forward that are also consistent with these messages of the UNSGSA. So in this slide, you will see, first, again, as I mentioned, continue to build the digital public goods that are designed deliberately based on outcomes. impact for all men and women and underserved segments of the population. The second is the importance of building trust and certainty through regulation, consumer protection frameworks, and appropriate application of international standards. I think this is, a lot of you would say, the first wave of reforms in terms of, putting in place the rails, trying to build on, digital literacy of the population, making the use cases for digital, the private sector rolling out all these, innovative products. Key now really is really the trust and certainty for the public to adopt these digital services and really take, benefit from its, what it offers. And this is needed. The public needs to feel that they're protected, that, that their services are sorry, some uh back, background noise. Okay.
Yep.
um yeah, regulators, policymakers, and regulators, have the international standards, for example, from the BCBS, from the CPMI, are really giving us enough framework to really see what kind of regulations are fit for our contexts. And I think policymakers and regulators should really look to those and see how they can put in place the regulatory, policy, supervisory frameworks in their jurisdictions to make sure that, the players are doing well, protecting consumers, and offering products that are fit for their market. I think this trust and certainty is something that we all need to work for. It's a shared responsibility across providers, government, and even the customers themselves. Third is really, again, I cannot emphasize this enough, on clarity on outcomes. Digitalization and innovation is not the end. We need to see, what impact this innovation will do. If we have this lens, we will see how, the design and the delivery of the products will change because of the focus on the outcomes that we want to see. We can even look, for example, Her Majesty in her work is really looking at algorithm biases, for example, to see whether are we in fact enabling, or are we, on the flip side, actually having these biases that preclude certain segments of the population from accessing credit. So the innovation will always have many sides, and if we are clear on the outcomes that we want, then I think this will be a good guidepost in terms of the way the products will be rolled out. The next one is really the support to MSEs as the broad foundation of building back better, or really more broad-based and inclusive financial systems. I think we saw, again, how vulnerable the MSEs are, but also the opportunities for them to take part of a more digital ecosystem. So I think that there are being part of a merchant value chain, for example, that could be fully digitized. That will really help them, to borrow Accion's word, buy, run, and sell better. There's many opportunities around that area that we think we should, both public and private could work on. Again, focusing on outcomes, I think the work has focused on financial health as a policy objective that defines the type of financial inclusion we want. In the past, some may think as financial health as a second order issue. First be included and then think about being financially healthy. That is not the case, because the causality is not clear. There are some, like for example, a study coming out of Kenya showed that even as they increased inclusion levels significantly, financial health actually declined. So how are we looking at our populations in terms of their ability to save, ability to manage day to day, manage future expenses, guard against shocks, and plan for the future, and also feel confident about their financial state? So these components of looking at financial health, and how do we work towards that? How are our financial institutions designing their products to look at the financial health of their clients? We have very good examples coming out of Australia on this, and both on the private sector side, also starting with your employees, for example, looking at the financial health of your employees. There's such an important link to physical health, which we know is really paramount of paramount importance now, of mental health. And so trying to see when we look at financial inclusion, are we in fact contributing to the financial health of those customers? So it's not A to B, but really looking at them simultaneously and making sure that both policies and products take that into consideration. And finally, these pathways forward are only possible with cooperation and collaboration across all stakeholders. Public-private is really a well-known one, but I think also emphasizing private sector collaboration, cross-industry partnerships, I think is more important than ever. I talked about, for example, MSEs in part of a digital ecosystem. So here you will see needed collaboration across FMCG companies, across payment companies, across retail banks, for example, to really see what kind of cross-industry collaboration can take place to benefit the whole ecosystem. And of course, at the end of the day, the segments of the population that we care about. So, Nimisha, just some very, high-level food for thought, hopefully, and to start off this, I'm sure would be very interesting panels from what from what I know of our panelists. So thank you very much for this opportunity, and my contacts are on the screen in case you have any questions or any possible points of collaboration. So thank you very much for the invitation, and glad to be here.
Thank you very much, Pierre. Thank you very much for sharing those really interesting observations that you're seeing, and also outlining the momentum is there to basically build back better. And I think there's a number of us that are supporting that. I wonder if we could just take a very few minutes to maybe just answer some questions. I have some, but it's great to see that we have some people, attendees coming in with some questions. I think the one that I'm going to start off with, because I think you sort of ended up talking about the public and private partnerships. So this question is from Susila, who talked about government agencies moving as fast as private sector. So I just wanted to, from what your observations are you seeing, do you find that private sector was ahead and government is just playing catch up? Or has it actually been the other way, in which government has actually moved very quickly and it's now more private sector that needs to adjust? You're on mute, Pia, sorry.
It's bound to happen, right?
I know, it is.
Yeah, I did say that government to person payments was a catalyst in driving a lot of the digital payments. But of course, as we know, innovation and agility really comes from the private sector, and that's great. And I think government should capitalize on that. And in certain aspects, government should really be focused on enabling that kind of environment where the private sector can really innovate very quickly. But what we saw also with the pandemic is the greater appreciation, at least on the government side. So if they are not as fast historically, I think there is now momentum and recognition that they need to put in place at least the frameworks, the rails that have to be in place, the regulations, so that the private sector could, really innovate and deliver in their typical manner in terms of speed and agility in terms of digital. So it's really a collaboration between both government and the private sector that we want to see.
Makes sense. Everybody moves together at the same speed. I wanted to just ask about, you obviously talked about some of these national trends that each country has been putting in place. Taking a bit more looking about we've also seen cross-border transactions. So is there any advice that you think maybe ASEAN as a region, what they could do? Because I know you do a lot of work with some of the international standards bodies as well. Is there a role there that more could be done?
Yes, well, Nimisha, that's an important question because prior to my role now, I was, as you know, at the central bank and part of the ASEAN Working Committee on Financial Inclusion, and definitely one of the ideas was really to support and to develop really better cross-border payments across the ASEAN, and that's really key. And I think at the discussions at the standard setting level, this is also a priority, actually a priority right now of the G20 Global Partnership for Financial Inclusion as well. Looking at, of course, issues of cost of remittances and cross-border payments and what are the opportunities around that. Even looking at innovative products and seeing what are the both risks and opportunities in enabling cross-border payments. So definitely something that we should look at, but really setting in place first the rails, as I always emphasize, really the digital public goods in terms of interoperable payment systems, internally in country and across countries as well would be key. So agreeing on standards and agreeing on rules, for example, will be key across the region.
Great, thank you very much. And I'll just take one very quick question, is just from your observations. What are some of the are there any success examples of private sector private public sector collaboration that you could just draw us to? It's always good
Yes,
to hear
well,
positive
yeah.
stories.
Yes, well, Her Majesty actually convened what she calls a CEO partnership. She convened this at Davos in 2018, where there are 10 CEOs of global companies that are part of this. And here we are seeing them pilot. So here we have AXA, Airtel, the Ant Group, MasterCard, PayPal, Santander, Unilever, PepsiCo, Rabobank, and all of them are trying to find solutions that they can co-create together, leveraging on their strength. So as a payments company, together with an FMCG, together with an insurance company, for example. And there are many successes in terms of the pilots that they've created, and we're really looking to this as a model of that type of cross-industry partnership. So in our website, you will see a lot of the information about the CEOP partnership, and hopefully we will see more in terms of digitizing merchants, experiences in digitizing merchants and value chains for MSEs through these partnerships.
Great, thank you very much. Thanks, and we'll certainly look out for hearing more about partnerships. So I think, thank you very much, Pia. I think we'll now move on to the next part of our webinar, because I'm sure our panelists have lots more food for thought to share based on their experiences. But thank you very much, Pia, for shedding the scene and sharing those insights. So for our panel discussion today, we've got some range of diverse and experience and expertise within the ASEAN region. So we're very excited that we have Vechakarun Jivakont, who's the Deputy Director of Payment Systems at the Bank of Thailand. We have Sir Lito Villanueva, who's the Executive President and Chief Innovation and Inclusion Officer at Rizal Commercial Banking Corporation, based in the Philippines. We're also delighted to have Debbie Watkins, who's the Chief Executive Officer from Lucy, and she'll be telling us more about what Lucy is. And we have Anthony Thomas, who is Chairman of Momo, and looking forward to hearing from him. So our panelists are going to share with us start off by giving us a bit of an introduction into what are some of the initiatives that they have been seeing in their markets or in their countries in light of COVID-19 to help facilitate digital transactions. I'll then take on to the next theme of trying to understand more about, unpack where exactly are these opportunities for these micro SMEs. What are some of those problems that they are facing? And of course, what are the solutions? What can we do to help? And what role can government and private sector play? So to start off that panel discussion, Vijay, I'm now going to turn to you and let us know what has been happening from your experience in Thailand.
Right. Can I have the slide, please? Right. Thank you very much. So let me start with the case of Thailand, right? So I think Thailand and many countries around the world are moving away from cash society to cashless or even less cash society. So however, especially before the COVID-19, I think one of the most challenging issues is how to change customer behavior. Because although we have infrastructures there, also we have a lot of policy, but if they don't want to use, they don't want to use. So that's the most challenging things for us to change customer behavior. Okay, so for Thai people, and I guess I believe that it's applying to all other countries as well. So they are very much familiar with cash, and they believe that cash will always be around. For example, we see a lot of activity. For example, like they have a debit card in their hands at the point of sale, but instead of using that debit card, they walk to the ATM machine to get cash and use cash to pay at the point of sale. So that's kind of behavior that we do not want to see, but then it's difficult to change. Financial literacy can help, but again, financial literacy can help, but doesn't effectively change the behavior, because behavior is behavior, right? So that's difficult. But the COVID-19 pandemic, I think that's a big force for a sudden shift from physically to digitally. So we see a lot of people change their behavior. We see a lot of businesses have changed their strategies. Okay, this is of course because of the COVID-19 measures. For example, like we have to stay home, we have to be locked down, work from home, social distancing, or even a fear of touching banknotes. So that kind of thing that make people have to change their behavior. But the shift will never happen if there is no digital payment infrastructure. And that is the fundamental for all economic and financial, including trading activities. So luckily, Bank of Thailand, in collaboration with other key stakeholders, have been developing and promoting payment infrastructure of Thailand for many years. In 2017, we implemented the prompt pay service. And the prompt pay service is the faster payment. So with that, people can transfer or make a payment instantly using mobile number or their ID numbers. So that the big change actually for Thailand in terms of the payment infrastructures. And on top of that infrastructures, there are several payment innovations. For instance, like QR code payment on top of that prompt pay infrastructure. So the digital payment that make more convenient, more choices, more secure with reasonable cost. And that the let's say like the fundamental that make people can move from physical to digital more efficiently, right? Again, but although we have those COVID factor, although we have the digital payment is there, but there are still a group of people that will never change their behavior. For instance, the elder generation or people with less technology literacy, as well as the micro and small businesses, street food stores or community shops. They don't want to change. They have no incentive to change their behavior. They prefer cash, right? Cash is everything for them. So again, COVID-19 situation, COVID-19 outbreak, and even digital payment is there, it's not going to change their behavior, especially that group of people. I was once on the side that believed that this group of people was going to change. It's not going to change. And I was wrong, because now I learned that if the incentives are good enough and are right, they change. Okay, so from the COVID-19 outbreak in this situation last year and this year, government launched a subsidy program to help Thai people during the COVID-19 outbreak. For example, we have like 50% co-pay campaign, like for example, 100 baht, I pay only 50, another 50 the government pay for me. So that the 50-50 co-pay campaign. And we have a government relief payout campaign where eligible person can receive amount of money per month through the government e-wallet. And this time is special because this time this kind of money will go to the government e-wallet. So first, they have to download the government e-wallet. What happened is that elder people or even old generation or less technical savvy, they try their best. They ask their children, ask their friends to download for them, and now they try to learn how to use the digital payment. So that's kind of thing that we can see that the behavior change suddenly in just one policy. So that's the big thing that is happened that I can see from my eyes, right? And some people said this situation shortened the time to change the ecosystem for more than 10 years. So we shortened the time for more than 10 years. And if you move to the next slide, we can see a lot of evidence that prove that the behavior is already changes. On the left-hand side in the picture of Thailand map, we see a lot of let's say the distributions of electronic payment across the country. Okay, it's not just only in the city area, but also in the rural area. So we see a lot of distribution across the country. And also on the left, on the right-hand side on the graph, we try to use the machine learning things to try to group the people, to cluster the people. So we see that we have 4 cluster of people like laggard, conservative, early learning, and adaptive, right? So we see a little bit shift of laggard and conservative to more early adopter and active user. So for that, we see that the policy, the COVID-19, the government policy has really changed the customer behavior. Okay, and on the next slide, it's not just people. Business has also changed their behavior. Again, the small shop, small businesses, street food stores, they have to change in terms of like we have the demand push, right? So we have to try our best to accept the new means of payment, which is the digital or government e-wallet. Again, business a lot of business has also changed. For example, we have online education that grow a lot. For example, like in some cases, they grew more than 640% YOY last year. We see a lot of health insurance, telecom company, food delivery, they change their behavior. We see more than 20,000 food store moving to the online platform every week. So that's shows the changes of the business strategy from physical to online move. So that's what we see in the case of Thailand during the COVID-19 outbreak.
Thank you very much for that, Vijay. I think quite clearly it's great that you actually have a lot of this data to share this insight on the change in consumer behavior. So I see a lot of value in that, and also in terms of what sectors you are seeing shifted there too. So I also think the other thing that I picked up on is your comment. We talked about government and private sector moving at the same speed. It sounds as if consumer behavior has to operate at the same speed as the infrastructure that you're putting in place. So could we be a situation where we more people are more active users, but we're crying out for better infrastructure to roll out? Don't know. We'll come back to you with more of those questions, and keep your questions and comments coming in. I'm keeping track of those, so we'll come back to those. We'll now go to the Philippines, and Lito is going to share with us what experiences they have had there.
Thank you so much, and good afternoon. And if I may be allowed to share my screen.
Yep, we can see them. Yep, we can see those. Thank you.
Okay. It's nice to see Pia and of course Thomas here, Anthony, who was both of them are actually my colleagues here in the inclusive digital finance space in the Philippines, where It is also nice to to be part of this discussion or session, because for the Philippines, we are almost at the tail end of yet another lockdown, but it has been extended until May 14. No, so but we hope that this would be the last, of course. But having been under community quarantine for over a year, we already know better than to expect things to go as hoped. In our own companies, I'm sure the agile teams are adjusting to the ever-evolving demand of our operations. That's how we grow and thrive in these challenging times, always being one step ahead and being able to adjust whenever the need arises. So nobody was ever prepared for a pandemic of this magnitude, not the big businesses and most certainly not the small ones. It brought many industries to their knees and kept some others still struggling to recover from the massive losses. Perhaps some would philosophize that and say that COVID-19 has been the great equalizer, attributing to it the fact that the virus does not choose its host in terms of race, color, class, or that its effects can be felt across all scales of businesses and across all walks of life. But truth be told, that COVID-19 is not the great equalizer, but rather reminded us of the many inequalities in our society. When lockdown was imposed in various countries and people were compelled to stay home for their own safety, access has become an issue not just for physically acquiring basic essentials, but also in paying for them. Businesses had to needle their way through the throngs of Goliaths in the e-commerce space, where selling and reselling became one of the major alternative livelihoods, and where digital real-time payment channels became the transaction platform of choice. But before we go to the now state, allow me to backtrack to pre-pandemic in the Philippines, where we saw a major segment of the adult population still unbanked at 71%, or 51.2 million adult Filipinos, and only 10% of that population were using digital. It has therefore been the goal of the banking industry under the reins of the Bangko Sentral ng Pilipinas to push for digital transactions. From 1% in 2015, the industry targeted to drive 20% to digital by 2020. Now, fast forward to the present state, where we see ourselves surpassing that target with 50% of the transactions going digital by 2023, and bringing us closer to our other goal of 70% of adult Filipinos to be part of the formal financial system in the next 2 years. So with these figures, it would seem that driving transactions to digital was made easier for us. Well, the answer is yes and no. Yes, because while we have gained headway with it, the transactions that we may see now are actually growing and may have not had the same success when it comes to banking the unbanked. The current situation that just further highlights the challenges of this objective. One being geography. As an archipelago with more than 7,100 islands, we have remote islands with very little or even no access to physical banks. When banking means an hour-long land travel and a ferry ride that would cost you even more than what you can deposit in your account. It takes so much to do banking transaction that the costs outweigh the benefits, and thus getting a bank account becomes the least of a low-wage income earner's concern. Add to this is their lack of sufficient knowledge or requirements to open one, wanting of something as simple perhaps of a government-issued ID. So what you're seeing on your screen right now is our implementation or deployment of ATM Go, which is a mobile POS machine that is being provided to all our payout partners, which are the co-ops, MFIs, or rural banks. So we deploy them in what we call the geographically isolated and difficult areas. And all these were magnified during the pandemic. Health protocols, limited brick and mortar operations. Going digital became the only way to go. And as a result, those with little to no access to physical banking became further alienated from important financial services they should be taking advantage of during this critical time. So customer delight has always been at the core of banking, and that has been our center of our operations. And as an institution that holds this role seriously, we all had to sit down and roll our sleeves, and we needed to do the things differently. We can no longer do business as usual when the times called for business unusual. COVID-19 pandemic has truly been right now. And I'm glad that we were able to strap our belts and step on the gas. But we won't be able to do this if we has no gas to step on in the first place, so to speak. At RCBC, we have our teams and heads to thank for the foresight of setting the groundwork for digital transformation early on. Our thrust is financial inclusion. And back then, we were already expanding our coverage for our ATM Go or mobile ATMs that caters to clients from far-flung areas. At the heart of every RCBC project is the goal of empowering Filipinos to enable them to uplift their lives. And we knew from the get-go that we had to shift our focus to finding ways to continue providing much-needed services, especially to those who need it most. So RCBC led the first massive private initiative to disperse the financial aid from government to low-income families coming from a universal private bank who are beneficiaries of the social amelioration program. And we have even used a platform that we had yet to formally launch, Discarded. And this is actually covered more than 3.3 million low-income families, totaling to about 12.43 billion, covering 16.6 million individuals in 72 out of 81 provinces. So RCBC Discarded became the first of its kind inclusion super app that presented a wide array of financial services for everyone and anyone. It made account opening easy, and navigation of the app was user friendly. It's in Taglish to ensure nothing is lost in translation or miscomprehended. And soon you will see its adoption in different Philippine regional languages. It was an innovation which other leaders in the fintech space took its cue from. We also recognize, however, that being the first doesn't alone make it. We don't want to be the first to dash, but the last in line. So we ensured that there was continued engagement by presenting relevant value proposition, such as high interest rate, livelihood opportunities, and of course, our massive education campaign of enabling our Filipinos to be able to understand what financial education and digital literacy means. So through this entire journey, we were able to note valuable insights worth sharing. So financial inclusion and digital acceleration are not mutually inclusive. In fact, they go hand in hand. After the use of a light version of the Discarded app for the disbursement of government aid, we officially launched it on July last year. The reception was overwhelming, with the app garnering 1 million downloads in just a little over a month since it was launched. What does this tell us? People will not hesitate to adapt to the digital shift if you give them access to the right tools. Here's another insight. People from the provinces are also eager to take part in this digital shift. Discarded currently has more than 4 million downloads and over 2.6 million registered users. And we're in 7 out of 8 Discarded users are actually coming from the provinces. Yes, they had to shift to mobile banking because of the pandemic, but also it turns out they will undoubtedly do so. If we remove the barriers that make traditional banking intimidating, in a matter of 4 months since launch, we have Discarded customers across all 81 provinces nationwide, making it the most extensive customer reach by a universal bank through a digital platform. What are these barriers exactly? The daunting precept of going to a brick and mortar bank and preparing documents to commence the process of opening an account. With Discarded, we work to dispel this through the most basic way possible, through simple requirements and the use of the customer speak. Mind you, it was not merely a change language itself, but by using the customer's lingo. Our app has been designed with our users in mind. Since it was meant to be a starter basic account, target was primarily the unbanked, who are mostly from low-income families, and MSMEs to help them with their transactions and push for velocity. Through the relatable Taglish interface, users felt more at ease and confident in using the app and eventually taking part in the greater financial system. With this in mind, RCBC Discarded offered products and with the sachet financial features that will make the customers more comfortable to try it out. In Filipino, we call it patikim. Our products and services now include microinsurance for MSMEs, and individuals, as well as loans for different types of needs, all accessible via the mobile app. The microinsurance products cost as low as 35 pesos or less than 72 US cents, a rather cheap price to pay for one's peace of mind in this time of uncertainty. On the other hand, access to important loan services enable individuals and MSMEs to bounce back and help jumpstart the economy once again. All of these services come with flexible terms and are low-cost iterations of similar products that were previously offered solely in physical banks. With the use of their own language, we are also expanding our financial literacy programs so they can get past the jargon and learn about the practical aspects of mobile banking. Our recent partnership with Viber helped create the Madiskating Filipino Viber community. This is an in-app savings and investment tips, as well as lessons on how to maximize Discartex products and services are now made available to over 20,000 strong community in a matter of 3 weeks. This we hope to soon turn into a useful marketplace for all members. This streamlining of the banking sector made possible by the digital acceleration spurred by the pandemic only proves that the best opportunities are usually disguised as seemingly insurmountable challenges. The fruition of the BSP's vision of becoming a truly coinless, cash-like, and digital-centric, sustainable, and resilient society is now within grasp. COVID is not the great equalizer, but amid these challenging times, we are made to innovate in order to give the underbanked and underserved an equal footing when it comes to making financial decisions. This pandemic may not be the welcome disruptor, but it has nonetheless disrupted us to do better, to move faster, and to give more. Through our concerted efforts, resolve, and the right purpose, we can transform challenges into opportunities, opportunities into the right innovation, and innovation that will define the future. And hopefully, it is the best way possible. Thank you.
Thank you very much for that, Lita, and sharing about RCBC's experiences. And also thank you very much for the reminder in terms of, when we talk about financial inclusion, it obviously is about, serving the underbanked, which is in some cases, a lot of times the women, but it is also, as you highlighted, the low income families, it's those that are in remote regions. So the term financial includes a whole diverse of other vulnerable groups as well. We'll come back to some of those points. There's a couple of questions in the chat group that maybe, Lita, you could send a response to, but I'm going to give a bit of time now to hear from Debbie in Singapore, and she can tell us a lot more about Lucy. Debbie.
Thank you. Can I share my screen here? Just give me a moment.
Yep, sure. And if you can turn your camera on.
You there?
Yep, I'm here. Yep, we can see your screen.
Great. All right.
Thanks, Debbie.
Hi,
you
welcome.
Just turn your camera on if you can.
Oh, hang on. I'm going to have to switch back to somewhere else to do that. Let's try this one here. Oh, no. I'm going to have to unshare, I think, to do that.
Don't worry. Carry on.
Sorry, yeah.
Yeah, no, that's fine.
Technology here, of course, right? So, hi, everybody. I wanted just to take a bit of time to talk about Lucy. As I say, I'm Debbie Watkins, the CEO and co-founder of Lucy, which is a neobank for women entrepreneurs. We actually started building Lucy in February 2020, which of course was pre-pandemic. It's now been shown to be more relevant and valuable than ever. A number of people have asked me why specifically women, and so I thought I'd take a couple of minutes to explain a little bit about what we're doing and why. The first point is, as a number of people have said, is that entrepreneurs are the lifeblood of the global economy, even more so in recent times with layoffs and the sort of dwindling nature of formal education. An extensive global research has shown that women entrepreneurs generate higher revenues, create more jobs, and use their profits more wisely than average. And yet women entrepreneurs still have consistently less access to business building financial services than their male counterparts. And this is everywhere around the world at all socioeconomic levels. We've seen the same patterns everywhere from the US to the UK to DR Congo to Pakistan to Papua New Guinea and everywhere in between, including Singapore. And so what we have seen and what we decided was that enabling and empowering women to start and grow their own businesses really makes sense for everyone, but it's just not happening enough. And so that is why we at Lucy decided to do what we're doing. Lucy is designed from the ground up to provide entrepreneurial women everywhere with the tools that they need to take control of their financial future, to realize their potential, to grow and thrive. From supporting foreign domestic workers to save to start their first business back home, helping homepreneurs get started after a career break, small and micro business owners to effectively run and grow their own businesses, and successful women to in turn invest in other women. We've started in Singapore, but we'll be tailoring products as well as languages to be relevant to each market that we move into. We've recognized that one size fits all is really one size fits none, and therefore being affordable, accessible, and relevant to our customers is really at the heart of what we're doing. Our technology platform has been built from the ground up to enable us to work with different partners in different countries. This enables us to scale quickly and efficiently by serving customers under our own brand and enabling partnerships with mainstream financial institutions that benefits everybody. So a final small but important point about Lucy. Although we are focused on empowering women entrepreneurs, my two co-founders are male. And this is, I think, an important point when we talk about what we're doing and why. Because we created Lucy not because we're anti-men, but because empowering women entrepreneurs to succeed helps everyone, women and men. Thank you.
Thank you very much for that, Debbie, and we look forward to hearing more about that when we have the panel discussion there. Look forward to finding out more. If we can now to Anthony, who's probably been waiting to give his, we now go to Anthony in Vietnam. Tell us about Momo.
Thanks, Nimisha. Is it possible for Kevin to show the slides?
Yeah, can you see them?
Yes.
Yeah.
Thank you.
Good to go. Thank you.
Yeah. So Kevin, you can move to the first slide. I thought I'd spend the 5 minutes on three things. One, to provide a little bit of context on Vietnam, and because we tend to sort of bracket all of the countries within ASEAN as one, but we all know that there are some significant differences. The second piece will be a little bit about Momo, and the third will be what we specifically, or platforms like us, do for MSMEs. So on the context for Vietnam, we're about middle of the pack, I suppose, in ASEAN in terms of size and scale, and we were right up there with, I suppose, the Philippines on growth rates pre-COVID. But one thing the country did very, very effectively during this period is manage the whole COVID situation. So when I was asked to provide, the changes we made, sure, we made changes, but and I think nobody was immune from the impact of COVID globally, irrespective of whether we've had only 3,000 cases in this last year or more. Because we are, in the end, interdependent. And given that Vietnam is export dependent and tourism dependent, there was definitely economic slowdown, though there was still positive growth. Having said that, I think there was an organic move anyway towards a digital economy. And all of those indicators are very favorable. Where the Google Temasek Bain report puts the 2025 estimate on Vietnam's digital economy to be about $52 billion, which would then put it second behind Indonesia. If you move to the second slide. Yeah, just 2 or 3 pages on Momo, but I'll do it in 2 minutes. I think one is that we are a super app for Vietnam. We have several of the use cases that you're probably used to seeing everywhere: the traditional top-up bill payment, peer-to-peer, whether it's wallet to wallet or wallet to bank. Merchant payments, online, offline, domestic, international, large, small, lifestyle, whether it's travel or entertainment, and financial services, whether it's credit, savings, or insurance. I think the technology, and this is important as we get more into the territory of MSMEs, the technology allows for partners to build and deploy mini apps within our app, which is already sort of a leading digital platform in the country. Kevin, can you move to the next slide, please? So what's behind that is really the platform where we have integrated directly with a vast majority of the country's banks, merchants, utilities, financial institutions, distribution partners, again, big and small, to enable this for the larger Vietnamese population. Kevin, the next slide. And what we are pivoting to now is financial services. I think Pia made the point up front that it's not really just about having millions of registered users, but more around what we do to improve their lot. And therefore, we have a set of offerings around credit, basic savings and wealth management, and now insurance. But let me come to the last slide, which I think is really, Kevin, if we could move to the last. What's sort of relevant for this panel and how we think about MSMEs. So while we have integrated again with the large merchants, what we believe is still somewhat of an unsolved problem is really in this space. And the more we've tried to solve here, we've realized that we can't stop at just payments and financial services, which is somewhere only part of the mix. So we have tried to address everything that we can, either on our own or through whether it's most who struggle on the marketing side or the discovery side. Again, for those who are online, we work on online mart. For those who are offline, we try and drive traffic to store. We have ads and mini apps, as I mentioned, on our platform, but we also enable payments for Facebook ads, which is quite basic because other than the marketplaces, like Lazada and Shopee, a lot of commerce, as you know, happens on Facebook. And to pay for those ads is not easy because we're in a country where the credit card penetration is low single digits. So we are fast evolving into a very significant payment option to advertise online. When it comes to supply and inventory, and delivery, we typically integrate with partners, again, to make this available to all. And of course, our core is around payments and financial services. But what we really focused on is easy onboarding for a merchant. In fact, we allow, and a very significant part of our P2P volume is really informal merchants. So there is that transition. I would say about 20% of P2P recipients you can make out from the pattern of the money that they're receiving, because there are large numbers of one-way transactions are really small merchants and typically social sellers. And how we graduate them to financial services with a larger value proposition around working capital or small savings is part of what we've tried to address. And then, of course, for slightly larger entities, it then becomes around direct disbursements and managing tax payments. Okay, I'll pause there because I'm sure the panel has more to discuss around this, and then we can come back at that time. Thank you.
Thank you, Anthony, and thanks for that last slide in terms of helping MSMEs optimize their digital businesses. I think that's an area where I want to take off from. If I could just ask a reminder, if you could just keep your mics turned off so that we can just hear the panel speakers they talk. I want to shift. Thank you very much. It seems as if we have lots of international examples of initiatives that have been introduced. I want to use the remainder of this sort of session to maybe shift more about what can we do? What are some of the still pain points, and what are some of the things governments, private sector, or even ASEAN as a region could do? So I'm going to shift that to that aspect. I wanted to just start off actually with Debbie, if possible. And this is picking up on what Pia started off about in terms of MSMEs, and also from my own research about, there's a growing number of female entrepreneurs, especially in the ASEAN region, and you've mentioned that yourself, sort of, Debbie. So is a sense that there is a bit of more of a momentum here with more women-led entrepreneurs. But in terms of coming back to what initiatives we need to have in place, what more support do you think these businesses need that is currently lacking?
I think there's a range of different things, and perhaps it goes back a little bit as well to what Pia and some of the other speakers were saying as well, is to actually be customer centric in delivering and designing and delivering services. And I think it's something that kind of historically we've seen that a lot of mainstream banks are really bad at doing. It's that kind of one size fits all type of approach. And it's like, well, what do we know about micro entrepreneurs? For a start, we know that their cash flows are lumpy. Right? You don't get the same amount of money each day or each week. And yet most bank loans tend to be fixed repayment schedules, right, which don't fit to the cash flow. And I've seen examples in other places where people who have small businesses are actually borrowing from loan sharks to pay their bank. Yeah, which is crazy, right? Because they're so worried about being blacklisted, but their cash flows and their bank repayments aren't in sync. So I mean, this is just kind of one example of more that can be done. And I think, where we can distill this down is really listening to people and seeing the world through their eyes, rather than our own preconceived ideas of what life is like for other people. I've actually got an extensive background in doing kind of value proposition design and advisory for financial institutions, kind of 35 plus countries I think I've worked in now. But I've seen that it's a really difficult thing to do. Right, people tend to sort of look through the world with their own eyes, right, and see the way things are for them, and in many cases design solutions for people like them. And I think this is a key shift that really needs to happen, is recognizing the kind of sheer variety and different profiles, and that everybody actually does have a very unique need. And we've seen this with women entrepreneurs, that's not a segment, right? There are people who are doing small baking businesses from home. There are people who are earning hundreds or more a day as expert consultants. So they have a number of key things that really bind them in the challenges that they're facing, but they also have very different needs as well. And that's been our approach, really, is to actually see the world through other people's eyes. And to recognize that the unique pain points that people are actually having, and then from that position, designing products and services that are actually going to address their pain points.
Great. So I guess this is really kind of, you're creating, sort of encouraging other private sector players, in particular maybe some of the incumbents, to really start being more customer centric. But is there anything in particular that government can do to support these MSMEs?
That's a good question. Obviously, being based in Singapore, where the government's doing huge amounts to support small businesses, we're in quite a favourable position. And you know, there've been grants and payment holidays and all kinds of things. I think there are quite probably a number of things that can be done. Again, I'm not in a position to speak on individual countries, but I am aware, for example, that just the whole process of registering a business in some places is a complete nightmare and riddled with corruption and difficulties and lots of paperwork and really high expenses. And you know, that's one of the reasons that kind of dissuades people from registering a business. But actually having a formally registered business can be very beneficial. And so I would say one of the things that governments can do is actually streamline and lower the cost of business registration and make that whole process much more transparent and cost effective. I think that that would actually have a kind of beneficial effect in encouraging people to actually formalize their businesses, which, as I say, is better for everybody in the long run.
Thanks for that, Debbie. I think perhaps Mary can go to Vijay, because I think obviously from your experience at the central bank, you've had cost in mind in terms of introducing that initiative to try and get some of the customers to, particularly those that were perhaps a bit more reluctant to shift in their sort of space. What are some of the additional things that the central bank is looking at? So, because there's a question, if your customer behaviors shift, what now? I'm thinking again in terms of looking forward. Where's your priority areas for keeping the momentum for digital transactions?
Yes, right. That's one of our big question, that how to keep that momentum, because we are afraid that after the government policy is gone, for example, like government won't pay any more money to the people, then people will keep the government wallet into their wallet again and come back to use the cash again. So this is one of the key issue now that we try to keep that momentum. So now we have a lot of commercial banks that come to us to talk about how to utilize more on the government e-wallet. But again, the government e-wallets belong to the government, so we have to have a conversation between the government and the commercial bank. So then is the next step is try to utilize the government e-wallet more and more, right?
Okay.
And one thing, I like to add one thing, like one of the major issues that obstruct people to, and also business to move away from cash to electronic payment is that the tax issue. Because electronic now, the cost is lower and lower, so the cost is not a problem anymore. The technology now is more like customer centric, is user friendly, so the difficulty is not there anymore. But because of the tax issues, for example, like we try a lot, I mean, in the bank industry, we try a lot to promote the electronic payment in the country, but then the revenue department announced next policy for example, like if you have a transaction more than 400 transactions per month, then you have to pay tax. Then what happened? People won't use the electronic transaction anymore. So that's kind of thing that people are still fear of the tax issue. So that's we have to be more collaboration among banking industry and also the government revenue department to streamline and how to communicate to the people to make them understand more about the electronic payment and also the tax issue.
Mm-hmm. And in terms of the other sort of thing that might be sort of putting people off is this concept again that Pierre talked about, and I think it's come up in our chat group, is about building trust for the customers in terms of and you know, the security, being safe to make digital transactions. What sort of role are you seeing, or what changes are you needing to implement in terms of putting in place regulations and international standards, again, picking up on that theme? How important is that? Vijay, sorry.
Yeah. Yes, I think that is a big issue for us as well, how to use the international standards and also the government policy. So basically, I think we need to have a, let's say, the national agenda that we can work together, not just the government sector, but also with the banking sector and as well as the regulators. We work together as a collaboration and making or elaborate it to the national agenda, and that I think that will be make the impact to the country.
Great, thank you. So picking up on that sort of regulatory theme, Anthony, from your experiences, what more could be sort of done in that space, do you think, to help some of these MSMEs?
Thanks, Misha. I think I wouldn't place a huge responsibility on the government side. I think a lot of the initiatives, particularly during the pandemic, were very well received. Pia talked about conditional cash transfers throughout the world. In fact, I was in the Philippines, and so was Pia when this first broke out. And I remember speaking to her and very quickly accelerating those initiatives. I think that there is a narrative around encouraging the move to digital, and I think that central banks, in the way that they regulate these entities, also kind of add on a layer of trust. I think that the government adopting themselves and in their ecosystems does help, but I think that's where the private sector needs to really pick that up and use it absolutely to its advantage. Right? I think that in general, countries may have nuance in terms of how they encourage this, but I think that the onus is on us in the private sector to really build on it. For example, if those funds are flowing into wallets, how to make sure that they're not sort of withdrawn out at an ATM, but more used with the plethora of use cases and how we get consumers to adopt. I think that's more on us. So I think an enabling framework and encouraging use within its ecosystem is useful, but the rest is really for everyone else: banks, wallets, and other industry players, as again was mentioned earlier, whether they're in retail or otherwise, to encourage participation.
Great, thank you. And I'm going to ask Anthony, is just picking up on a question in the chat box here, and just sort of throwing this to you, is just any comments about digital currencies? Will this become mainstream? Is this an alternative to fiat countries? I throw that in for you if you've got any thoughts from your experience.
Sure. So I think that I've often thought about what problem that really solves, particularly when it's currencies that are not fiat, because a lot of the objectives that need to be met can be met with fiat currencies. I've, in my prior life, executed on a blockchain-based remittance, cross-border, but with fiat currencies, and I think that well, digital currencies, and not just private. I think now central bank issued digital currencies will probably become more of a flavor, and I think maybe that helps in making this more sort of regulated and pervasive. Because ultimately, if you're dealing with money, I do believe that that regulation matters. And while technology gives us great advantages, to innovate, I think that we still need some framework that allows for, protection at a more at a level which is at the central bank or the government of the country. So mine is a contrarian view to a lot of the hype around cryptocurrencies, etc., sort of gaining traction. But I do feel over these last few months that maybe I'm missing out on something, and who knows.
Thanks for sharing. And I think that's the concept of digital currencies is a whole separate topic for another webinar. But it is very interesting how we just talk about initiatives like, Vijay talked about putting in QR code initiatives, the mobile banking that Lito talked about, and Debbie also mentioned too. but when we talk about, I'm looking future, inclusive recovery, is the future digital currencies when we start thinking about digital transactions. So I think that's definitely a future topic, but maybe more of a reality than we think, given the developments in other areas. I'm going to now, with the few minutes that we've got left, if I can just turn to Lito. And I was very interested in hearing about the bank's initiatives to try and reach out to those unbanked population in those remote areas, and the low-income families. Is there any particular, I'm kind of bringing it back to sort of regulation or international standards that can help, or that helped you roll that out quicker?
Well, definitely number one is the enabling regulatory framework. Anthony knows this so much. I mean, because he led he made GCash the #1 mobile app in the Philippines. So thanks to Anthony. And of course, the thing here is that the enabling regulation allowed all players in the industry to really innovate and really push all of this, these initiatives forward. So it really made us do quick engagement and quick rollouts of all of these digital innovations, even at the height of the pandemic. So it's not just RCBC, for example, but other players in the industry, because I'm also the chairman of the FinTech Alliance, .ph. And I would see a lot of these players really thriving amidst this crisis. And I think no matter how robust your system is, no matter how sexy your mobile app is, if there is no regulatory support or support from the regulators, I mean, your proposition is dead from day one. So I think you just have to make sure that you comply with all of these regulations. And the good thing there is that the regulators also came up with what we call the regulatory sandbox, or the test and learn approach. So that will allow even the startup fintech players to really test their initiatives. Actually, I just saw another question here. There was a question by Juanita as regards what would be the barriers, especially I think the barriers that she was trying to cite is the poor connectivity. Because of course we know mobile apps or smartphones would really need Wi-Fi connection, and we know for a fact that in the Philippines we still have areas or remote localities that would have poor telecommunications infrastructure. So there are two barriers. One barrier is on internet connection. So that's why the Philippine government just came up with an executive order that would allow satellite internet providers to service missionary locations that would now allow, say, co-ops, microfinance institutions, rural banks, to practically push for digital transactions in those remotest areas. And number two, the barrier on national ID and for customer onboarding, or eKYC. So now the Philippine government also is now aggressive in terms of rolling out the national ID system, which started in December last year and massively being rolled out this year, where they have a very bold vision of registering 70 million out of the 110 million Filipinos by year 2021. So you have all of these things happening at a very fast pace. That's why the BSP came up with that vision of having 70% of the population to be part of the formal financial system in the next 2 years. So that's why it was quite a very bold and big vision for everyone here in the Philippines.
Great, thank you very much. And in terms of the regulations, so you've picked up of national ID system and the eKYC being some of the most priority areas to be sort of focusing on. Thank you very much for that. So happy to take any more questions in from the chat group. I see the few comments that have coming in. We've got about 6 minutes left. Time goes very quickly. We've touched on a number of discussion points so far. Perhaps if there's any other comments, feel free to drift them in. But maybe just finally, before I wrap up, maybe Debbie, perhaps you could share maybe a little bit more about, just to sort of find out in terms of cross-border transactions. Is there anything in particular, do you think, that for some of these female entrepreneurs that may be running businesses outside of their national countries, is there anything that you think ASEAN as a region could potentially do to help them in any way?
Probably yes, I would say. I mean, I still think we're seeing a lot of sort of unnecessarily high costs, particularly when it comes to low value transactions. And so, you know, one of our key segments that we're working with in Singapore is the foreign domestic workers who, of course, send money home on a very regular basis. And a lot of them are actually micro entrepreneurs and have small businesses back home, which are run by family members, but are ultimately paid for and supported by them. And, you know, of course, cross-border remittances have historically always been like really quite expensive. I mean, obviously there are more coming in now, and we're one of the key areas that we're focusing on is providing very low cost digital remittances from Singapore to the home countries of foreign domestic workers. And I mean, I guess if we had a dream of what could be done, I'm just kind of thinking of like the whole European set up with mobile phone networks, right, where you could buy a SIM card in France, and then it works across the whole of Europe, because there was an agreement reached that there wouldn't be any kind of cross-border roaming fees, for example. I mean, so if I was to kind of pick a dream out, it would be something along those lines. Is that, and I've seen some stuff similar that's in Africa actually, you know, with kind of different entities agreeing on some kind of cross-country partnership, which enabled anything cross-border to be viewed as being within one border. I think, you know, I don't know how realistic that is. I'm just sort of putting my little dream here, but I'm sure if you know, a regional association wants to find something that's going to be really beneficial, that could be something to have a look at.
That's great. So that's, I'm almost thinking, are you an ASEAN bank account? Is that what
yeah,
you have
something along those lines, right?
Yeah.
Where you can say if you've got an account with any bank in ASEAN, you can send to any other bank in ASEAN, and it would be the same as a national transfer, let's say.
Great.
Right,
Vijay,
maybe.
what are your thoughts on that?
Right. I like to add to that point as well, because today, 10 a.m. just today, the Bank of Thailand and MAS Singapore has just announced the launch of the linkage between PromptPay and PayNow. So now, like, the payment to Thailand and Singapore is on the faster payment track, and that is a bilateral payment. Again, we also have an initiative to have a bridge that have the multilateral for all of the country to link for the faster payment. So your dream, Debbie, your dream may become true in the near future.
Oh, you're making me a very happy person to hear that.
That's a great way to wrap up this session on a very positive note, and that's a very great announcement to share, Vijay, and I think that probably sets forward others to maybe start thinking and more of these. So I would like to say thank you very much to our keynote speaker, Pierre, and also our wonderful panelists for taking the time to share your experiences. We've come together and we've talked about the various initiatives that different countries have in light of COVID that is actually helping to put more of these digital transaction services in. We've heard from Vijay about how there's this shift in consumer behavior and the challenge is how do we actually keep it there. We've heard about the regulatory responses that have been helpful in enabling those, particularly to thanks for sharing some of the priority ones of being national ID systems, eKYC. It's important to keep in mind what are those priority, because when we talk about regulations, there's a whole suite of them, which we haven't even touched on in terms of the data protection, the cybersecurity aspect that's there as well. And thank you for sharing all of those. And I would also just like to say thank you very much to Sarah and Kevin, who've been working behind the scenes in helping out with putting this webinar together. We hope you found that enjoyable, and stay tuned for what our next topics might be. So thank you very much, and I'm sure it's an afternoon wherever you potentially are. Thanks for the speakers once again.
Thank you.
Thank you. Bye.